This is Economic Review. My name is Elijah Charles Kiange. Get involved at Metropole TVKE across all your social media platforms. My name is Simba Elijah Charles Kiange. Let me introduce the panel that is joining us this morning, just so that they can make sense of the biggest economic headlines that you're waking up to this morning. We're joined by GABRIEL MWENDWA, who's an investment associate. Gabriel, good morning, sir.
Good morning, Simba. How are you doing?
Fantastic. We can't complain. Also joined by RUFAS KAMAU, who's a research and markets analyst, Scope Markets. RUFAS, good morning, sir.
Good morning, Simba. How are you doing?
Fantastic, man. All right. We're also joined by Robert OCHIENG, who's an economic analyst and CEO at ABOJANI Investments. Robert, good morning, sir. Oh, Robert is not around. Could be joining us shortly as well. Wow, fantastic. All right, let me introduce the biggest, these topics then. Now, financial researchers have urged the government to increase focus on the fiscal stability, noting the lack of synergy between fiscal policy and monetary policy action, especially on the effect of the non-performing loan ratios in a high credit environment. They have, however, cautioned against giving fiscal stability the central role at the risk of harming the macroeconomic performance. Meanwhile, banks in the country have been advised to take advantage of technology to improve customer experience and back office processes through data analytics. Presenting on the second day of the 10th annual Kenya Bankers Association Research Conference, Swarthmore Business School's head of data science and analytics, Dr. John Olokuru, said that the sector needs to build a digital mindset where data and technology become the driver of customer experience. Let's get into that before we cross over to RUFAS and Gabriel, so we can make sense of that story.
On customer acquisition, which goes into sales analytics, market analytics. You realize our focus is on structured data, financial statements. SMEs are producing other sources of data other than just the financial statements. Can you find a way to tap into that? So the structured data is only 15 to 20% of the data is available out there. Unstructured is the key to a lot of opportunities that we are not really tackling out there. So descriptive analytics, we are doing it. Diagnostic analytics, we are trying to do. Now people are starting to implement predictive. Of course, now can get us to prescriptive. Now, many companies are looking at behavioral analytics. That's now the cognitive and adaptive. Can we get there? We need smart data.
Policy on financial stability aggregates definitely vary depending on the credit that you're looking at. And I mean, you can already tell that in a high credit environment, the effect is very different from a low credit environment, and particularly worse off in a high credit environment. And of course, this calls for additional consideration of prudential policies that need to be put in place, considerations that need to be put in place when we're dealing with a vulnerable financial cycle.
Those were submissions of the second day, that's on the bankers conference. It was held by the Kenya Banking Association as well in the country. Good. Now, let's look at that then, because they're saying that in a high credit environment, the government should not focus on fiscal stability, that should not just be the central focus. Saying that this might, in the long term, harm the macroeconomic performance. And they're saying that if you look at the loan ratios in the country now, especially in a high credit environment, then indeed, if the government focuses on fiscal stability just by that, they're going to hurt the macroeconomic performance. Just again, before we cross over to Gabriel and RUFAS this morning, let's then look at the data that we're presenting you here this morning in terms of how the banks have performed so far in the first 6 months of this year. Now, everybody does know that non-performing loan book is at 14%. Good. We cross over to the next data set this morning that we have for you on exactly how they performed in the first 6 months of 2021. Everything from gross deposits to profits before tax. all of them were pointing northwards. In fact, banks, they jumped to 96.4 billion shillings in profit after tax in the first 6 months of 2021. Moving on to the next one as well this morning on the fiscal side of things, then you're going to say that indeed when it comes to how the economy contracted in the entire of 2020, we did go into a 0.3% contraction. All right, let's cross over to the next one as well when it comes to the fiscal side of things. Now, government debt is a thing that the bankers actually did highlight, because that's where we're talking about fiscal consolidation from the government side, and you will see that composition in terms of government debt as well. And we're seeing the banks are the ones that hold majority at more than 50% of that debt as well. All right, let me cross over to Gabriel this morning. Gabriel, that in a high credit environment, if the government just focuses on fiscal stability, then they are bound to hurt the macroeconomic performance that in turn would go into an increased non-performing loan book ratio.
The monetary policy is really focused on the interest rate, and that's what they're complaining about. Basically.
Yes.
They're saying that given the rates, the interest rate that customers are being charged versus what the government is being charged or government is borrowing at, the banks are actually choosing to the government. Now, there's the word I've used there, choose.
Yes.
So it's the banks that are choosing to do that. Yeah. I cannot blame them. It's easy business. We cannot say it's the government only that is crowding out the private sector. The banks are voluntarily choosing to do that. The only bank we can say might be more forced to do that is KCB, because there's some government influence, but that has not been a problem. So the banking sector as a whole is choosing to make that decision. So maybe to just put context to what he should have recommended to the bankers directly or recommended to the government is that the CBR should go much lower, so that the government is borrowing at such a low rate that there's no way a bank will just keep pushing money to the government.
Yes.
That the monetary policy should have gone much, much lower, because the monetary policy is not affecting my borrowing rate. The funny thing, it's only going to affect at what percentage the government is getting.
Yes.
It's money. Our interest rates, when they were 18, 20, 22, the CBR was still not, did not have anything much to do. I mean, like I told you here previously, the MPC meeting that is normally held has lost its value. I told you very clearly, we were putting too much focus on something that no one else is focusing on. So that's really what I'd say the problem is and what should be done. So if CBK really wants to push monetary policy, then bring the rate government is borrowing very low,
yes,
which unfortunately is not going to match government's risk profile and its appetite, because if there's high demand for money, technically the rate should be higher. So yes, there's a disconnect, but they're dodging around the
pretty much. Gabriel, let me also, just before I cross over to Rufus as well, so why would the bankers in the country worry so much about the fiscal stability of the country, when in reality this government looks as if it's really focusing on that, and how they focus on that is through increased borrowing locally? Because if you look at the composition of debt, domestic debt in this country, banks in the country are taking what? 53% currently. Is that no good for them? Why would you complain when indeed, when we look at the composition of government domestic debt by holder as of even 31st of December 2020, again, we do know in the first 6 months of 2021, again, that borrowing again from the domestic market went up by 50%. So why would banks now in this country that have been known very well, that even when they are very liquid, that's what they're talking, that high credit environment, that they do not lend to the mass market, they would rather enjoy the fiscal indiscipline that we're seeing from the government? Well, is that not a contradiction from them?
No, it's not a contradiction. It's academic here.
Yes.
And how capital you attract from foreign. is low risk but has a high interest rate, then you see foreigners invest in this market. So, for example, fund through the bank money to the banks for all. Do they risk or is there money to be made? So when they look at the 13 to 14 range in which it's what you and I have been charged, but
Yes.
the local businesses, the risk profile has gone higher, then they're like, you know, the interest rate you're offering me for your normal business does not match the risk of your normal clients, which is the individual. Yeah. If it's investing in government, if I'm a foreign investor, there are avenues which would allow me to go directly to the government. So there's no loss for me. So what banks are saying is that when they say it's affecting macro, as Kenya, we might not be attracting the investors as we would like because we are not profiling our customers and private institutions' risk profile well enough, which is what would be seen by the banks. For example, if a bank is charging you 13%, an investor might want to bring in their dollars and then charge you 18%. So you're not going to go for that. You're going to keep pushing for the bank to, you're going to keep in the bank to give 14%. But from the foreign investor perspective, your risk profile should be charging you 18%. So what happens is that disconnect denies the country dollars. And I think you know where I'm going with it. You do not have foreign currency, then you know we're talking about currency exchange fluctuations, which CBK has been good at keeping within the desired range. But then there's always a macro problem, and it takes one event and it all unfolds. Luckily for us, COVID was not that event, but there are so many things that could go wrong, and you know the music stops.
Yes, pretty much. Rufus, let me bring you into this conversation as well, and I'll go back to the same statement that they're saying that they've asked the government to increase focus on fiscal stability. They're noting that the lack of synergy between fiscal policy and monetary policy action, especially on the effect on non-performing loan ratios and high credit environments. Rufus, from what you said this morning, do you feel that in this country, when it comes to that synergy between fiscal policy and monetary policy, it's not existing?
I would support what Gabriel.
Yes.
There's that disconnect between the intended actions by the Central Bank of Kenya and what the commercial banks are actually implementing. The central bank, yes, has a mandate. They cannot force the banks to lend to the economy.
Yes.
But they create that necessary environment for the banks to lend to the people, to the businesses, and help us through the path towards recovery. However, when you look at what is currently happening and the conditions surrounding our economy right now, we are still going through the pandemic. The number of vaccinations are rising, and the number of regulations surrounding COVID-19 are being removed bit by bit. We recently saw the issue with public transportation, where people now are around to carry full capacity. And this is really helping the economy. People are reopening, going back to the office. So we are seeing a lot of robust activity within the economy. However, when it comes to the cost of financing, this is where we are really getting the challenge.
Yes.
Because the interest rates are at record low, currently at 7% from the CBK. This is supposed to motivate the commercial bank to push more money to the people. But when you look at the data, this is not happening. The Kenyan government is currently competing with the private sector, and this is choking out the private sector. So, in my opinion, I would say it would make much more sense to borrow externally. The interest rates are much lower, which is very choking out the private sector.
Yes.
So, as Gabriel control prices, control the current inflation that we are experiencing currently, then I would suggest that the government reduces the amount of borrowing that you are doing locally, and then tries to get foreign loans compared to.
Yes, but Rufus, now would be the wish for you and I. We're not essentially from the banking industry or the financial services sector in the country, because these guys are benefiting, Rufus, which is why I want us to look at exactly where we are. We have a 0.3% contraction in the economy in a 2020. But if you're going to say which sectors are recovering fast enough in the country, then the banking sector is within those that have got, well, I would like to say a tremendous performance in a 2021, which is the question, Rufus. If the government borrows more locally, the banks, well, they will benefit. So what is this monetary policy that they actually are urging the government to sort of consolidate with the fiscal policy, Rufus? Because either way, if it's wrong on the government side, the banking industry is benefiting.
So when it comes to stock market trading,
Yes.
it can be a bit funny, especially in banking stocks. They are the ones that are not doing very well. Main reason the banking stocks are positions in the financial market, they try to look further into the future.
Yes.
So the information that is currently available has already been discounted. So when we started this pandemic and the interest rates were lowered, I believe this is when the banks were performing best, and investors placed their bets that the banking sector would be benefiting from these as the interest rates were low and the borrowing rates were going on the upper side. So in this case, we saw some good performance in the banking last year, but this is beginning to track this year because now investors are anticipating a rise in interest rates and changing conditions as we approach the end of the pandemic.
Yes.
So this information.
Pretty much. Now, gentlemen, let's move on to the next issue that we have for you this morning. One sustained moved by betting companies in the country to have the government's decision to implement additional taxes on all transactions conducted through online betting sites has failed. Now, the Finance Act 2021 introduced an extra tax of 7.5% on top of the 20% tax imposed on all winnings. They argued that the enforcement of the disputed law risks taking the majority of them out of business as punters and are getting taxed at every level of betting transactions, while turning down their request to have KRA stopped from collecting the extra tax. Justice George Odunga declined the request on the basis that while the implementation of the legislation may have ripple effects on how the betting industry operates, the immediate impact that will lead to the closure of the businesses had not been contented. Now, he further indicated that public interest militates against the suspension of the disputed provisions, since at the end of the day, should the gamblers succeed, KRA may be directed to refund whatever should have been collected so far. Fantastic. Gabriel, the issue of betting and betting tax in this country, it is back to moral values for our country. That's the only reason we've been fighting the gamblers in this country. Should that be the basis of running a specific industry in this country, when at a time we were saying it could give the exchequer some revenue? In fact, when they were running, the exchequer benefited heavily from their revenue. They accounted heavily to the exchequer revenue trend all the way from 2017. Why are we fighting the betting companies in the country right now, Gabriel?
And starts playing, how do I say it? You don't play with religion and making decisions for entire people. I'm a religious man myself, but I don't, you can't make policy based on such governing a diverse group. So the moral angle does not feature here. It's just, in fact, someone should say now government is principle, because If I want to gamble my own money, I'm not gambling anyone's money. So it's my money. Allow me to proceed. Has been taxed in these kind of sectors very.
We have a connectivity issue.
Back.
Gabriel, can you confirm you can get me? I lost you there for a moment.
Yeah, I can get you. So
yes,
as I was saying is that what I would do if I was KRA, because across the globe, these sectors are bad, and that's normal. So we are not blaming them for trying to do that.
yes,
They start in a way, had backroom charts to achieve taxes that even the sector could absorb initially, and then gradually increase that over time. Yeah?
Yes.
Even taxes that they themselves would not spend the entire time getting and monitoring what tax they're supposed to pay, because now you look at as there. So these are companies that are employing people, these are companies that are generating revenue, so you can come up with tax structures, but come up with tax structures that are so punitive that the sector is almost collapsing and affecting other sectors along with it.
Yes.
And remember, we live in a global market. Very soon, we'll have global players allowing us to bet globally. You pick a company which does not even have any presence in Kenya, and you bet on it, you're paid in Bitcoin and all of that, right? There's KRA, that kind of thing. So that's what they're putting themselves up for, that there could come someone will come up with a more international structure for betting where you go through a proxy, and KRA will never see it coming, and there's nothing they will do. So my advice to them and what should be doing is that, when anyone takes the moral high ground, they're just about to step on your rights or even not have a reasonable argument. So step from this podium they're on, discuss properly with the sector, and let adults, and whoever wants to gamble, let them gamble.
Yes. Rufus, let me bring you in, Rufus, on that. And I would like to end with that statement by Gabriel that, well, whoever wants to gamble can gamble. But then the government is saying, well, majority of the youth in the country have actually gotten into gambling, and the only way to stop them is by taxing every bit of the money on their winnings, on their placements, and tax also the betting companies more and more, so that now you sanitize this specific industry. Do you support, Gabriel, whoever wants to gamble can gamble, or the government actually needs to come in and control this industry in the country?
Support, Gabriel. People are supposed to have that kind of freedom.
Yes.
We are currently in a secular state. We have how the moral high ground. When it comes to the role of the regulator and the role of the government in creating the necessary on two things. One is a reason. We saw time when they bet some good amount of money from the economy. We know create economic making money, they are basically economy. They are not creating, not providing this or that service. The current provide is a kind of entertainment. So in this case, when making too many, it's something that the government is on, and make sure if they are making money, then so if they are making too much money out of an ailing economy, then that will be negative to the economy. At the same time, the effects of betting, the addiction, the effect on the youth. You don't have instrument, other ways of regulating the push to push for more products, guide them in understanding and make taxing them. You can reduce the taxes and then have them do something more positive with a longer term effect that will help the youth control themselves in terms of betting.
Pretty much. Gentlemen, let's take a tiny short break. Once we come back, 31 out of the actively trading 58 listed companies on the Nairobi Bulls are trading at levels that are lower than their levels on March 19th, 2020, when Kenya announced its first test of COVID-19, when the market went into jitters and we had a lot of investor wealth wipe out from the bulls. Fast forward 1 year and a couple of months later, they have not gone back to those pre-COVID-19 pandemic levels. What's going on? At a time when we're also talking about investor wealth at the bulls increasing by what? 600 billion shillings. Let's make sense of that data once we come back.